Let's move right on to focus in on a corporate which is Laurus Labs. The stock is really under immense pressure in today's trading session. The Q1 report card is not something the street is pleased with. Let's interact with the management to see what really transpired in the quarter gone by. Dr. Satyanarayana Chava, the founder CEO of the company, is now joining us. Good morning, Dr. Chava. We've seen a very significant compression in your margins in the quarter gone by. Could you tell us what exactly weighed in?
For margin contraction, we had challenges in procuring key starting metal from China, where there were environmental challenges for some of our vendors, and also a few factories were closed down. So we purchased intermediates as high as 80% higher cost than what we procure normally. That resulted in gross margin contraction. And second point which contributed to the lower profitability was forex fluctuations and also the product mix. But this is one-off, and we took steps to mitigate the raw material price increase risk and did successfully backward integration. In the last quarter, we used to buy almost 90% of our intermediate from China. In this quarter, Q2, we are buying less than 50%. But in Q3, we expect we will make all that intermediate in-house, which will help us to get back to normal gross margin trend. And also the product mix will also be back to normal, where our supplies to our CMO partner will be resumed in the Q2 onwards.
You just mentioned about the fact that the raw material costs will go down going forward. In the quarter gone by, what is the cost impact that you witnessed, and going forward, will we see some kind of a relief come by there?
It was approximately between 15 and 18 crores extra raw material price increase was there in Q1. And we expect that will be close to zero in Q3. And also we are in the process of ramping up our sales in Q2 and rest of the year as well. So for Q2, I think we are going to come back to a normal gross margin as well as EBITDA and PBT as we anticipated in our budget.
What about the other segments? How's the synthesis business performed in the quarter gone by, and do you see good growth coming in there going forward as well?
Except gross margin challenges, we had a good run in all divisions. So we grew our sales in synthesis, custom synthesis. We grew our sales in ARV, which is our core revenue driver. So divisions did very well, except gross margin challenges and the forex fluctuation. Otherwise, business fundamental wise, we are very, very comfortable, and we will get back to normal in Q2 itself.
Okay, and what about other segments like hepatitis C? That one is down 69% on a year-on-year basis. Any reason for that other than raw material costs, and do you expect a pickup soon?
See, our Hep C sales quarter on quarter, not year on year, so were less because of our less sales of APIs, whereas our profitability from a partner was similar to Q4 FY18 and Q1 FY19 similar, and we don't expect it will go down further.
For Laurus Labs, there has been a significant R&D expenditure as well that has been undertaken recently. Is majority of your capex over, and can FY19 then see monetization trends emerging out of that?
We are doing some two projects capex right now. One for existing capacity expansion, and other one is for specific block design we are doing for a CMO partner. These two are the major capexes we are doing. While we continue to focus on our R&D, so far we have filed 13 ANDAs with FDA, and 2 with Canada, and 4 with European authorities. So our regulatory filing are going as per our plan. So that is one significant advantage what we are seeing. Our R&D drive is going as planned.
And do you think these R&D spends will continue to remain high but will not impact margins as launches will also start to come in from the US markets?
As we expect 2 new approvals in Europe as well as in US, the commercial launches will happen during this financial year. As we mentioned earlier, our target is to file 10 ANDAs per year. That we are on track. This year we will file 7 more. That will take us to close to 20 ANDAs by end of this financial year. When we have done several validations in formulations, in APIs, and also in synthesis, we are doing registration batches for our customers. So, except Q1, which is an aberration, otherwise things are very on track with us.
Mr. Chava, we'll leave it at that. Thanks so much for taking the time out and addressing your earnings in great detail. Stock still lower though, by about 8.5%.